Welcome to today's presentation and the Introduced Investor Day. My name is Eric Castle and I'm an equity analyst here at ABG, covering Nordic waterproofing. Today I have the pleasure of introducing the CEO, Martin Ellis. We will have a 20-minute presentation followed by a short Q&A from me. With that, I'll leave it over to you, Martin.
Yeah, thank you very much. Hello, everybody. Thank you very much for joining. I'm proud to present Nordic waterproofing to you. Our business is to protect homes and buildings, and I would add also to promote sustainable building solutions. So moving right into our presentation, a short update on the COVID situation. Basically, we are focused on keeping our employees, customers, and suppliers healthy, and we've been very successful in that with very precise measures to continue to do so. And we have to say we haven't had any negative impact really on our financials so far in 2020. The future impact on business is difficult, obviously, to assess because it's very dependent on future GDP development. So if the pandemic, which is likely, I guess, has some negative impact on GDP, we will ultimately be concerned by that also. We expect that to happen maybe in the next 6 to 18 months. On the other hand, we also see some medium-term potential positive impacts, and mentioned two of them here. One is increased e-commerce requires additional warehouse building to deliver the goods, and big boxes buildings is typical something where we do a lot of business. And the other aspect is that obviously demand for data centers will increase further, and that is also an important part of our target buildings, large buildings, and a lot of those are built in Scandinavia. And we also see some more marginal positive impacts from the stay-home effect, where people focus more on their home. And we see that in our Distripont business, where we create environmentally friendly ponds and swimming ponds for people, mainly in Belgium right now, but it's a business which we would like to expand into the rest of Europe. Moving on to page 4. Our basic mission is to protect people and what's important. And the key is reliable waterproofing. The quality of our products is absolutely paramount. On top of that, we also emphasize the ease of use of our products. We want to make the life of our customers, who are basically the roofers, people who install these products, we want to make their life as easy as possible. And we've been successful in that. Next page, 5, you can see the typical building, which is the bulk of our business. It's a big box type building, and what we do there, we supply and also install ourselves, in some cases, bitumen membranes. That's the largest part of our offering. We also install EPDM, roofing membranes, which is a synthetic rubber product, which has the same function, basically, slightly different characteristics. We install insulation, which comes with the waterproofing solutions, a number of accessories, and we also cover parking, bridges, railroads with waterproofing materials. We provide geomembranes to isolate geologic stratus in mines, for example. And we also prefabricate facades and roofs. That's a relatively new business in our company, where we supply finished elements, which can be up to 20 meters wide, one story high, which are prefabricated in a plant and which are extremely fast to install on the building. So it makes building much more efficient. We also offer green infrastructure, could be a green roof, and it can also be public surfaces which are green, and obviously there's a strong trend in favor of that. And for the last few months, we have also been installing solar panels in Finland, relatively new product line. Moving on to page 6, you can see that we are also active in the pitched roof. more individual house sector. It's a smaller business for us, but we basically propose the whole range of our products and services there. We also have a business in Finland and Sweden where we do roof maintenance for individual houses. And of course, we install solar panels on such buildings. On page 7, you can see our basic geographic footprint and also a bit of the structure of our business. You can see that we are very much centered in Scandinavia, in the Nordic countries, but we also have businesses, especially in the synthetic rubber business in Northern Europe, UK, Germany, Benelux, and Poland, where we basically prefabricate roofs, and we also supply facade elements based on material which we produce in Sweden. So we produce a EPDM roll, and then we are able to measure out the roof and prefabricate the whole surface in a shop. And again, the idea is that it's much faster to install than the job site and a much more efficient solution for putting on a roof waterproofing system as fast as possible. Looking at the split of our business, I mentioned we produce, so we're an industrial company, but we also install waterproofing solutions as an entrepreneur. And the split is 73% industry and 27% installation services right now. You see that on the left pie chart. In terms of the exposure to new build versus renovation, it's about 50-50 right now. That makes us quite resistant to building cycles. The new build is more cyclical, more volatile than renovation work. Renovation is very stable and basically follows GDP. In terms of the country split, you can see that we're big in Finland, in Denmark, Sweden, a bit small in Norway, where we haven't been present as long as in the other countries. And we also export in the Sileco synthetic rubber business throughout Europe. Moving on to page 8, it's a short description of how we go to market. So you can see that the biggest part of our channels is direct sales to basically roofers and also general contractors when we talk about the prefabricated facade and roofing elements. What happens there is we usually sell to smaller roofing companies, and we have a very strong relationship with them. We supply products and services, of course, but we also help them with a number of things like apps and advice on legal, on marketing and financial matters. So we're talking about small companies, 5 to 30 employees maybe, and we help them with a number of things which they basically don't have the size to deal with themselves in all cases. But we also distribute about 30% of our products and services through builders merchants. Builders merchants sell usually to smaller roofing contractors who buy a whole bunch of products in one outlet. So when we sell direct to our contractor customers, we can fill up a whole truck with our product and send it to the job site. When the job site is small, then our customers will quite often go through a builders merchants where they can get a full supply of all types of products they need for a given job site. So the distributor has a logistics function in that respect. Usually our costs are a bit higher when we sell direct because of the services I just mentioned. And we have slightly higher gross margins and distribution, lower gross margins, but also lower cost. Moving on to page 9, I would like to talk about our acquisition strategy. We've been quite active in acquisitions over the last 3 years, and we continue to have a pipeline of acquisitions. The key focus in our strategy there is to add sustainable solutions to our portfolio. We initially, what we call our core business is waterproofing, products and services, and we've expanded that into sustainable solutions like the wood-based construction of our prefabricated elements, which basically is a great way to reduce the CO2 footprint of a building by replacing cement, which has a very big CO2 footprint, by wood, which basically absorbs CO2. The second example is the green infrastructure I talked about, where, again, we help to basically give the environment a better feel, but also to absorb heavy rainfall, to delay the transfer of water into the sewage system, which is a problem, especially in urban areas. And last but not least, we install solar panels, which obviously have a positive climate impact. Another key idea in our acquisition strategy is to enhance our product and service offering, basically trying to sell more product categories to our customer base. So whenever a customer needs products which are somewhat related to what we do, we try to be able to supply those to our customers. They like our service level, and we represent the one-stop shopping opportunity for them. The downstream integration, that is also a key idea, which applies especially for the synthetic rubber business, where, as I just mentioned, we not only produce the rolls, the material, but we also then prefabricate roofs, especially with our material, and that's a local business. And we have acquired a number of these companies in Benelux and other countries in Europe to go to the end customer with our product and service. Multiple acquisitions and a pipeline also in the present situation. To some extent, the pandemic has slowed acquisitions down slightly because it's a bit more difficult to do due diligence. Physical travel is a bit more complicated right now, but we don't expect that to change our strategy at all. Moving on to page 10. Sustainability, as you realize, is key to us. ESG is an important aspect. So in terms of sustainability, I described what we're doing in our portfolio, and we've come quite a way in increasing the sustainable solution part of our business. In terms of ESG, we obviously have a code of conduct which is in line with the UN's Global Compact. We have a whistleblower policy. And we also obviously make sure that our suppliers and subcontractors adhere to the same codes as we do. I'm now going to move on to an update on our current business. And this is going to be based on the Q2 figures which we published last month. So moving on to page 12. I'm happy to report that we had a very strong development of our business. Our sales were up 7% year over year, and that's all organic. 1% from acquisitions and a slight negative from a stronger SEK. EBITDA and operating profit both increased significantly, 34% and 43%. And we had strong cash flow from our operating activities, 114 million versus 78 the year before, the corresponding period last year. And here I would like to remind you that we are a strong cash generator, obviously a very stable business, and a very strong cash conversion in our business, which is usually between 70 and 90%. So basically a very stable stream of cash generation and therefore dividends. Moving on to page 13, a bit more color on our second quarter. Sales were basically the highest we've ever had in the second quarter. Strong underlying business conditions continuing. Part of that could be the fact that our customers obviously were focused on doing their business as fast as possible before any possible shutdown of job sites, which fortunately hasn't happened, but which obviously remains a risk because of the pandemic. Some of them might also have bought a bit of inventory to make sure that we could deliver, but we've been able to deliver as much as our customers asked us to deliver. The operating profit is due, of course, to the sales increase. We also have good cost control on our raw material input, and also a slight effect of reduced traveling, some savings in that respect, and no material negative impact from the pandemic so far. Moving on to page 14, you can see our balance sheet, and you see that it is quite strong again. We had, for example, at the end of last year, 1.8 ratio of net debt on EBITDA. That's on the bottom line, you can see that. And we have reduced that to 1.6 times in the middle of the season. And that means that at the year end, it will likely be significantly lower. You can see that last year we were at 2.9 in the middle of the season. So we've a significant reduction from 2.9 to 1.6, and we would expect at the year end to be at about 1 maybe. We are also happy to report that our ROCE is above our target level of 13%. We're at 15% right now. And we have a new agreement with our banks. So we've just renewed our financing agreements. So we have ample room in our credit lines also. And last but not least, the board of directors has been authorized to distribute a dividend of 4.5 SEK per share as soon as we get more visibility on the pandemic development. Moving on to page 15, that's a bit of a summary of what our financial targets are. And you can see that sales growth, we have a target of basically taking some market share and growing faster than the underlying demand, and we've been able to do that again this year. In terms of profitability, I mentioned the 13% ROCE target. We've achieved that and even slightly more. And we also have a solid capital structure, which means that we are ready to use any acquisition opportunity. We're actively looking for acquisition opportunities, and we have the balance sheet to make those acquisitions. Moving on to page 16, the outlook. Obviously, we can't make a forecast as far as our profitability to the year end is what is going to be because of the pandemic right now. As I mentioned, we haven't seen any effect so far. We can see maybe a slight slowdown on the horizon in Finland. And we haven't seen that in our sales yet, but there is definitely talk about somewhat less projects coming onto the market, which might impact us in about 6 months. In all other countries where we operate, we don't see any significant sign for a downturn yet, but it is clear that if the pandemic continues, if there's a strong second wave, there will ultimately be a GDP impact also on the building industry, which has resisted so far very, very well. But we don't have any reason to be pessimistic at this point at all. So that was my comments on the situation. Again, we believe a strong investment case, good cash generation, good dividend potential, and a stable business model with some potential upside in terms of further acquisitions. And now we'll be happy to answer your questions.
Certainly. Thank you, Martin. And firstly, the oil prices have been very volatile in the past few months, as raw material cost is a very large part of your business, and your cost base, I mean. How do you handle these fluctuations?
Yeah, first of all, I would like to maybe specify that we have three main raw materials in our core business in the bitumen-based products. So bitumen is just about 1/3 right now of the total raw material cost. So a bit of a it's an important part, but it's not the only cost we have, far from it. But your question is very valid. There has been volatility. We've seen a very low point in March, April in oil prices. What we usually do is we hedge oil prices from time to time when we think we have an opportunity. And right now we're hedged until the end of first half of next year. I would say the impact has been slightly positive, of course, but it's not a major factor in our total cost position. So I would say we don't expect any negative impact in the short term at all. We also have recently diversified our bitumen supplier base. We used to buy most of our bitumen from Nunes, and Nunes has been struck for some time with US sanctions. That has been lifted now, so they're operating absolutely normally, but we thought it was prudent to be able to also operate without any Nunes bitumen. We've achieved that, but I'm happy to report that they supply normally and we continue buying from them.
Perfect. That was my next question, so I'll skip ahead. The waterproofing market is quite consolidated, and acquisitions has been very important for you for growth. What's your view on your current acquisition pipeline?
Yeah, as I mentioned, it's a bit slower in terms of executing those, but in terms of the pipeline, we're quite active. We are right now looking at smaller targets, a number of smallish targets, but we're quite hopeful that we will manage to do some of these deals, and it means that in the short term there will not most likely be any medium or large acquisition in our books, but it might well happen next year. But right now we're sort of dealing with smaller targets in the immediate future.
Okay, perfect. And looking at acquisitions you've made acquisitions in green roofing, solar, and prefab elements. Which of these business areas do you find most interesting?
Yeah, I think in terms of the mega trends which we're trying to profit from, we have made the right choices. So these trends have been confirmed and continue quite strongly. What we did have, and we reported on that in the last 2 quarters, is we have some execution issues in the prefabricated element business. So we're working on that. We're having a significant profit improvement program there, and we're not sort of out of the woods yet. It's not a huge part of our group, but we're dealing with that. But in terms of the underlying trends, I think it's very encouraging. So we're looking for increasing that exposure further. And right now we're trying to do that mainly in terms of increasing our geographic footprint. So what we usually try to do is we buy one company that's active mostly in one country, and then we try to replicate that in the other countries we know well. And we've done that with prefabricated elements. We're doing that right now with the green infrastructure. We are going to do that with the solar panels. We've done it with a Finnish roof maintenance company where we now have a significant operation in Sweden, etc.
Okay, perfect. And one last question for me. Looking 10 years ahead, as you're focusing more on non-bitumen products, do you still expect the bitumen products to be a majority of the group?
That's difficult to say. I would say our target is probably to reduce it maybe to 50. I mean, to expand the other businesses to the extent that it's maybe half of our business. It could, in the longer term, 3 to 5 years, it could maybe be 40%, something like that. But it will remain a significant part of what we do.
Okay, thank you very much, Martin, and to everyone else listening in.
Yeah, thank you very much.